Hey, this is Peter Cunha, your New Jersey real estate giant, broker owner of Open Doors Realty, and I'm here with my buddy David Baum, like I am every week from Cross Country
Thanks, Dave.
Mortgage, buddy.
Everybody, David Baum, Cross Country Mortgage.
Hey, so what's going on? We talked about that the Fed was going to have they're going to do something with interest rates last week. We never really kind of followed up on it until last couple of days, but what are you saying in the market? Because it's not good if you're a buyer right now. Is that kind of the gist?
Yeah, I mean, I could, you want me to share a chart real quick and kind of show you?
Yeah. So just before you share the chart,
Yeah,
one thing that you always tell me is the 10-year bond is what we really need to focus on.
yes, there's basically 10-year treasury as a good indicator of where interest rates are heading and or going. But it's also the mortgage-backed securities, right? So the treasuries and securities markets are both something that we look at on a daily basis, kind of hourly basis. And unfortunately, the Fed spoke last week. And unfortunately, the Fed is still doing anything and everything they can to try to combat inflation. And in turn of doing that, they still have their foot on the gas pedal to raise interest rates, to try and increase unemployment, amongst other things. And it's causing more volatility continuing in the market. And interest rates are taking the brunt of the beating, of what they're trying to do. And interest rates, over the past couple of weeks are continuing to get worse, unfortunately. It's affecting more affordability and purchase power. This is not permanent, obviously, but this is something that everybody in the real estate and mortgage industry is feeling, the pinch of by the Fed right now, and we're all trying to make the best of it. But interest rates have rose drastically, and right now, interest rates, fives are long gone right now, unfortunately. Yeah, six in the sixes. They are pretty much almost in the rearview mirror as well right now, or at least heading there. Into something that starts with a 7. Hopefully it doesn't continue to keep going, but if we break through some more support, it could be 7, could be 8. Who knows even where it may or may not stop.
So Dave, you and I, before we hit the record button, we were talking about the pace of these increases. We've certainly seen these sort of rates before in the past. This and again, not that long ago, right? Mm-hmm. We're not talking about decades ago, 15?
Yeah, I mean, 15, 20 years ago, even. Yeah, rates, we're above 6 and 7. Yeah.
Yeah, the acceleration is something that you mentioned that really caught my kind of eye, or my ear was, the rate that we've gone from even sub 3% during the pandemic to where we're at now. Let's call it 7.5, just to throw a number out there. But we're more than double. We're 150 times, 150% higher than we were when we were at 3%. And the reality, it's like I was telling my buyers, when we went from 3 to 5, that's where we were before the pandemic. We were at around 5%. Now we're just high. I've seen a lot of headlines where it's like, is the Fed just aggressively, and listen, I'm not an economist. I don't pretend to be one on TV, but it's like, even Elon Musk is saying, what are they doing? They're just, kind of throwing numbers out there because they don't know what to do. And, they're just kind of, hey, listen, this isn't working, so let's just keep going higher. And when we talked, the Fed kind of raised rates by, I guess, 3/4 points, and that was kind of baked in a little bit. And then people sat and digested it. And then, we jumped on the call today and I'm like, where are rates? And you're like, oh, we didn't have a good day the other day. You were talking like 150 basis points. That
Yeah,
kind
I
of
think yesterday was down about 167 basis points.
right.
Which that doesn't mean 1.6%, to the rate. However, it does make a drastic difference in
Sure.
pricing alone.
So one of the things that, even, with my circle of realtors around the country, it's one of the things that we've been talking about is, there's still three positive things that, we don't want to lose focus on, right? We've been talking about marrying the house, not the interest rate, et cetera, right? If you find the house that you want, just, affordability, we'll keep saying that until, until we're just, you can't say it anymore. But the reality is this, what was it? Your guys, the underwriters and the qualifications of these buyers kind of going up to this point has been really, really strict, not like the bubble days, right? And a lot of people are saying, oh, like we're going to crash 10, 20%. That's not going to happen.
Yeah.
And the reality is because people were properly qualified for the mortgages that they got. The second part is inventory is still historically low, which relatively, yes, we have more inventory than we've had in the past. And if anybody, has any questions about any specific areas, give me a call. I have charts on everything. And then the third part of this is people don't have to move when they have equity in their house, right? I don't necessarily, I want to sell, but I don't want to go from 3% interest rate to 7.5 just because I need a bigger house. I might explore different options. And, one of the things that we were talking about is we're, not that we're looking to like ninja loans or anything like that, but we're trying to get more creative so people can afford a better house. You mentioned like arms and paying down points. What does that stuff mean? More on
Yeah.
the points side.
Yeah. So, well, real quick, obviously, yes, people traditionally look for the fixed loan product. 30-year fixed is the most common product, right? When interest rates rise aggressively like they are now, there's a good chance people in that 30-year fixed may refinance in the future no matter what. So people are thinking, you know what, if I'm going to take a higher interest rate on a 30-year fixed, and I'm probably going to refinance this down the road because rates at some point will come back down, why do I want to pay the extra interest now?
Right.
Let's look at what's called an adjustable rate mortgage, right? And adjustable rate mortgage, where it's, the 3-year, 5-year, 7-year, 10-year, those are the periods of where they can be fixed for. The 3 and 5-year arms are a little riskier because they will reset sooner than later. The majority of people may look at a 7 or a 10-year arm because it has a little more protection, and it gives them 7 to 10 years before they may need to refinance, or at least gives them a little bit more wiggle room in case rates stay high for 3 years or so. But it does allow people to have a shorter fixed period, a lower interest rate, and save interest in money on that loan for that many months, and thinking that they're going to refinance anyway because there's no prepayment penalty on that type of product. People are looking to pay discount points or looking to do a buy down, right? So that basically what they are is a discount point is basically you're kind of prepaying interest in essence. You talk to your accountant, from a tax perspective, but discount points could be tax deductible. Talk to your CPA once again, obviously, for those kind of details. However, people are looking to possibly, all right, well, what is a discount point? How many points can I maybe pay? Is it worth it to do so? So really, you have to look at what's called the B2B test, the benefit to borrower test, okay? And you say, what is my interest rate with no points? What is my interest rate with a half a point or 1 point or 1.5 points or 2 points, right? How much money do I save on a monthly basis with that? And if it say I'm going to save $200 a month, that's $2,400 in 1 year. If it's going to cost you $4,800, that means you'll break even in 2 years, right? Technically, an underwriter looks at if you break even on a B2B test in less than 48 months, then it could be a good decision, right? The borrower has well, what if I don't break even for 7 years? Well, doesn't mean that they can't do it. It just means that it may be more of a benefit to the borrower than an underwriter's perspective. They like to see that you pass that test, so it makes it worth it. Yes, it's a good decision to do this. Some people may have different, they're buying an investment property, they're self-employed, they need write-offs, whatever. They may be willing to pay extra points to save money on the monthly payment. Whether it's worth it or not on that B2B test, in their eyes, it might be more beneficial from a tax perspective, right? But the reality of people is they're looking at that. There's a lot of people are paying points right now to lower the rates because they've been kind of out of control on a downward spiral the past couple of weeks. So there are people that are looking to pay points and get a lower interest rate and save money on a monthly basis with that lower rate. Thinking that they'll probably refinance, but it may not be within a year or two, just without the unknown of where rates are going to be.
One of the things is, because people are still focused on that interest rate, whatever it is. Like they hear their friend, I guess you were telling me that you just locked somebody up at what, 5.5 or 4 and 7?
Yeah, actually, I just had a closing last week. It was a 4.875 on a jumbo loan, and the attorney told the client, I haven't even seen this on a closing disclosure, and I don't know how long. How'd you get this rate? And he's like, oh, you're working with Dave. And yeah. I'm like, that's not the case. I mean, yeah, the client was, good qualified client. It was a jumbo loan. The rate was available when I locked him in. And the attorney's like, this is probably the last time I'll see this rate. And I don't know how long. And the clients obviously were super appreciative of it, but it just goes to show how quickly things can turn, as that was locked not even 60 days ago.
Yeah, and I think, that's a good point. I was taught, I had breakfast with one of my agents today, and we were talking about, what the value add, right? Because I had to fill out a questionnaire for something that we're working on. And it's, what differentiates you from other realtors, right? I always laugh when somebody interviews me for a position. I'm like, listen, we're all going to have the same comps, all the same houses within a quarter of a mile. Here's what's sold. I can tell you what the differences are. I can suggest a price, right? None of that differentiates us, right? And then it's like, what's the next qualifier? It's like, oh, what do you charge for interest rate? How long are you going to lock me into the rate? And I'm going, I always say, that's always flexible. If you want to pay me more, go for it, right?
Yeah.
It's the reality is what they don't value is these sort of relationships where, you're saving, potentially a buyer that wants to buy their house X amount of dollars, which, they might put that money in to make their offer more appealing, right? And I know it sounds a little doomy gloomy that what we're talking about when it comes to the interest rates, but we're waiting. We just had best and final for one of our buyers on a house that's like $700,000-800,000, and we don't have any contingencies, right? And we're not the highest offer, but in this market, are you willing to take a risk on somebody that still has to sell their house? Like, it's a lot of things to consider that are outside of just, hey, we're going to put a sign on your front lawn and list your house for this. It's,
right.
Having you and saying, hey, you can buy this house, and your monthly payment is, $3,000 or $5,000 a month, depending on what it is. It's really important for people to understand that. And, unfortunately, sometimes it's just educating people. And then sometimes it's just people want to hear what they want to hear. So, I just appreciate you being a partner and doing these because I think it's so important. Last week we didn't want to talk about this, right? Because listen, we have to talk about it.
Yeah, we don't. No one likes talking about this stuff, However, it's the reality that we're all dealing with. I talk to a lot of friends in the industry, on the mortgage side and in the real estate side, and obviously everybody's feeling the pinch, but it's what sets us apart, from our competition, right? Our reliability, our expertise, and results. Really, it's just what we're a a wealth of knowledge, and the clients, we speak the truth. We're honest. We're ethical,
Right.
and and we give options. To let people make informed decisions. And that's like I said, there's not as many transactions going on in today's market as there were in the past. And you gotta, every deal is precious, and every client you talk to, I mean, you've got to, make them aware of every situation. And the thing that stinks is you could talk to somebody yesterday and tell them what a payment's going to be, and today it's different. And why is it different? Rates went up. I mean, and you can't pre-approve somebody thinking that the rates are low. You got to assume worst case scenario right now, because rates keep getting worse, and someone's already maxed out. They can't even afford that house next week, possibly. So it's challenging.
I'm thinking about our buddy in Asbury Park that recently bought in a condo, right? And he's looking sweet right now. At the time, he wasn't, he had that, that credit score that, nobody wants. And, I know that, his personal life, he was going through a transition, but he's looking really good right about now.
Yeah, there's people that would love to be below 6% right now. Yeah, and you would never think that would be the case, but people that are talking right now, they'd be happy to be below 6. If the market keeps going the way it's going, they'd be happy to be below 7. People want to be below 5 and 4, thinking that that's what the reality is. Rates were artificially deflated during COVID, period.
Right.
And they're drastically the other way right now. And hopefully we'll get back somewhere in that happy median.
Yeah, one of the things that we were talking about, one of the ecosystems that I'm in is just, you have to also evaluate where the price points are, right? The lower price points, you're still seeing transactions. The higher price points, I mean, I randomly bumped into another realtor at a coffee shop this morning, and he was talking about, I got a listing, just north of $1 million, and the guy's already moved out and vacant, right? So, is he going to be, one of these guys that's going to have to accept 950 now, right? Who knows, right? It's just only time will tell. But it's like you said, I remember just some sellers, 3 months ago, and we thought we were chasing the market then, and I kept telling them, I was like, let's not chase, just price aggressively and get some offers on the table. Even if you get offers, you don't have to accept them, right? Like that's a misnomer. You listed it for 500, you really want 550, you don't have to accept that even 510. And people will be like, oh, why don't you want to accept this? I'm like, you're not that qualified.
Yeah, it's a different market, that people are accustomed to. There's been cycles, probably 3 or 4 cycles that I've kind of seen in my career over the past 20 years in real estate mortgages. This is one of the more challenging ones, just because, interest rates have basically more than doubled in less than 9 months. So affordability was pretty much at all-time highs, 9 months ago, and people's affordability and buying power have shrunk, drastically.
Right.
So it's trying to find that balance in the market for everybody.
Yeah, and it's let's see. I'm just going to pull something up. I just want to see, because one of the things that we focus on is how many closings have they been, right? You
Mhm.
pick the town in Monmouth County. I don't even care. Pick anything. Dave, you want to pick a town in Monmouth County, just for an example?
Just take Middletown over by you.
All right, perfect. Middletown. We're just going to look at closings. Closed and say the last 14 days. All right. 39 homes in the last, so there's closings, they're happening. Let's see if there's some contrition. Maybe that's, let's keep just using Middletown as kind of, let's see what it's at next Tuesday when we do this video.
Yeah, that's fine. Yeah, and see, obviously that's, some of the neighboring, that's all in Middletown, right? That's,
All of Middletown,
Yeah,
which is
not just
biggest county in
Bedford and all the other surrounding towns of it.
New Monmouth, Lincroft, you name it, Belford,
Right.
all, so.
Right. So it's a big town to obviously look at, but let's see. And see what happens, I guess, on the numbers for next week. But